Hey everyone, it's Wellens. Welcome to another bootcamp training, Forex bootcamp training. In this session, I want to do a quick tutorial on understanding market structure. I failed to do a video yesterday, got caught up doing something, so I want to do a quick video today. That way you guys could get some additional information on how to actually understand what market structure is. So in this video, I'm gonna share with you exactly how to identify market structure, what is market structure, and what you need to be looking at when you're actually looking at the charts. Okay, so market structure is pretty much to draw it out for you guys. That way you know exactly what I'm talking about. So if you haven't already subscribed to the channel, please do so. All you gotta do is hit the subscription button and also hit the bell button. That way you actually you get notifications of future videos when I do trainings like this on YouTube. If you're part of my private group, you're getting this directly to you through my Facebook chat. But if you're part of my YouTube channel, make sure you dial in once a week. I do trainings like this every single week. The other thing I want to say is thank you so much. I have now 500 subscribers. 500 subscribers. That's a great milestone for me on my YouTube channel. And I thank every one of my subscribers. You know what I'm talking about. If you subscribe to my YouTube channel, thank you so much for being one of the 500. Now think about it. If you just share my channel with this one friend that you may know, I can go ahead and double that to 1,000. That'd be a lofty goal to hit within a couple of days. So help me hit it. So thank you so much for being a subscriber. I do appreciate you. Thanks for the wonderful comments. Thanks for the encouragement. And thanks for watching my YouTube, my video that I put on, which is an audiobook on the Candlestick Bible book. I got over 24,000 views on that. And that's a milestone in itself. And I thank you for viewing that. Please continue to review that video over and over and over. Take copious notes because I'll be teaching on that as well. So market structure, let's dive back into it. Let's get into it. So market structure is pretty much understanding what the market is doing, okay? And once you understand what the market's doing, because the market will go doing one of these numbers here. You have a low, then you have a higher high, and then you have a lower high, then you have a higher high, then you have a lower high. So this low is bigger than this low, so that's a lower high. And then the market will go up again and create a bigger higher high, which is bigger than this high. So it's a series of lower lows and higher highs. And once you have this going on, you have a trend, okay? So this will be considered an uptrend. And then on a downtrend, it does the same exact thing. You have a lower high, then you have a lower low, then you have a lower high, lower low, lower high, lower low. So this low is lower than this low, and this lower high is lower than this lower high. So this is what we call market structure. So what happens is once you understand that the market does these things, because it'll go up, consolidate on the top, and consolidation is pretty much, this is what consolidation is when the market goes sideways, and you don't want to really be in a consolidated state because the market hasn't decided what direction it wants to go. And then you bypass all of this. So you don't want to trade it when a market goes sideways. So you stay away from that. Okay, so we're going to go ahead and delete that right now and just focus on market structure. So now the great thing about market structure is this. If the market does not break certain lows, it'll continue to rise higher. Because what you want to do when placing a trade, you always want to place a trade on the pullback. Okay, you know the concept: buy low, sell high. So you want to place your trade on the pullback. So if you miss this pullback, you just wait for the market to make another higher high and then pull back and make a lower high. And then that's where you will enter to make a higher high. Okay, so we'll be looking at the charts really soon so we can dive deeper into this concept. But one of the things I want to show you when understanding market structure is this. Okay. Okay, so we have a low here. So then the market makes a higher high. It pulls back and makes a lower high. The minute the market breaks structure, this is structure here. So actually, I don't want to use that one. Let me delete that. Use this tool here. The minute the market breaks this high here, that higher high, which is right here, it just broke structure. Okay. So it broke structure and made a higher high. So whenever this happens, it makes a higher high, right? Now, when it pulls back, you have to look for a fair value gap. And we'll talk about what fair value gaps are and what are order blocks. Okay. And we'll discuss in future videos supply and demand. Because my strategy has a lot to do with understanding what supply and demand is. Okay. So whenever there's a pullback, there's an area in between this section right here where there's going to be a gap. Okay. And once you identify the gap has to be filled with this pullback. Okay. The gap has to be filled with this pullback. So if I was to create a small gap right here, you have to understand that the market has to come back and fill that gap in order to bounce off it to continue to make a higher high. Okay. Now, clean that up a little bit to show you what I mean. Okay, so this is a gap. So the market's got to come back and fill that gap right there. And once it fills the gap, it bounces off the gap and it makes a creates a higher high. Okay, so that's what we'll be looking for as entry points in the market to submit a trade. Okay, we look for the pullback. We look for the gap within this upward pull, upward trend, and then we take an order either at the order block or the fair value gap. So let's dive into the market. And the same applies when you're looking at a downtrend as well. When you have a downtrend, there's a pullback. Downtrend is going to be a fair value gap between this area here. Let's say that area is right there because it's got to come and fill that area, right? This pullback has to come and fill this area. Now, if it doesn't go past this area, you can still be in the downtrend. But typically it'll fill that area, bounce off that area, come back down, and that's where you actually want to place your trades right there, and then set a ratio of a 1 to 2 or 1 to 3 ratio. We'll talk about what ratios are. It's all about setting ratios and setting um, take profit levels and stop loss levels as well. So there's a lot of things that we're going to be just diving into in the near future. So play please subscribe to the channel and pay close attention to what I'm teach you in the next couple of days, weeks, months, because it all is part of a overall puzzle piece. Well, each piece will be part of the puzzle, and once you put the puzzle together, you have yourself a trading plan. Okay, and once you have a trading plan, you can identify these areas within the market and whereby you can actually place a trade, and it'll either go in your direction or hit your stop loss. So that's why we want to put a stop loss on every one of the trades that we actually place on in the market. Okay, because the stop loss is all about preserving your principal. Okay, and if it goes in the opposite direction, you don't blow your account. Because 99% of the traders who trade do not place stop losses. And stop losses is what protects your account. If you don't put a stop loss and it goes beyond the fair value gap, beyond the order block, if it goes like this, you never place a stop loss, it'll blow your account. You lose a lot of money and you might blow the account as well. So it's really important that once you place a trade, so let's say you place a trade below this fair value gap, you want to make sure you place your stop loss below your order. Okay, so that's not what I want to use. Again, I'm using the wrong one. It's this one here. So you want to place your stop loss below right here. This will be your stop loss. And then you set your take profit above. So you can copy this and clone it. And we place your take profit above. Okay, so this is the stop loss. Okay, so we'll mark that out for you guys really quick. Stop loss, we put SL, stop loss, going to be below your order. Okay, and your TP, TP will be there, stop loss will be there. You put take profit, TP, take profit. Okay. And that's usually a 1-to-2 ratio or 1-to-3 ratio. Okay. So that's pretty much what you need to learn and understand when placing a trade. You want to make sure you're in the trend, an upward trend. You want to understand that there's going to be a market structure shift. Okay. You want to make sure that you actually place and know where your fair value gaps are and your order blocks are. And you want to place your trade on a pullback when it goes into the fair value gap, order block, and then you want to take your profit at the top, okay, for a 1-to-2 ratio. So let's dive into the market now, and I can show you exactly what I'm talking about. So if we're looking at this downward trend right here, okay, let's take a closer look at that and try to understand market structure, see what we can find here. So let me go ahead and make sure I make this bigger so you guys can see this. And I wanted to put this video out yesterday, but today's Sunday, so I want to make sure I at least got a video out for you guys for this week. So, all right, so this is a market structure here, right? We have a downward trend. What we're looking for is a reversal of this downward trend so that we can place a trade going upward. So we already know by looking at this, we have a downward trend, right? Now, based on what I've just taught you, let's structure this out here. All right, so what do we have? We have a trend. So let's mark it up here real quick. We start down here, come up, come down, up. Black means a reversal, so we're gonna make sure we take advantage of where the black is. Reversal, so we have an upward trend. So as you can see, the market's making higher highs, right? And also lower lows. That's what I'm marking up, higher highs and lower lows, okay? Another higher high because it's bigger than this high, and then we have a lower low, and then we have the peak, right? Where it starts to reverse, because as you can see, when it starts to pull back, this lower low is now lower than this lower high. Okay, so that's considered a pullback, and that's also considered a reversal. So whenever you see that, it's reversing on a downward slope, but we want to focus right now on the uptrend. So we have an uptrend right here. Okay, so first thing we do is identify that this is an uptrend. All right, so let's take a closer look at that. This. Okay, so, but if we look left, right, we need to understand, okay, where is the reversal happening in this downward trend? Okay, so we mark out the most recent lower high, which is right here. The most recent lower high. So you're looking at a downward trend, the most recent lower high, the pullback right here. This is where it's at. So we put a line on the most recent lower high. We stretch it all the way out. So what candle broke this structure here? This candle right there. Okay, so that candle right there broke that structure. So that's how we know we're having a reversal. So imagine you didn't see all of this over here. All you saw was this right here. Okay. Now, what happens is when you actually put that line right there, okay, now you're anticipating an upward trend, right? But we have to now place an order block, which is this candle right here, order block right here on the bottom. Let me stretch that out. It's make that a grayish color. So that's your order block. Okay. So as you can see, we also have to place a fair value gap because this candle is bigger than the candle over here, right? So in order to create a fair value gap, it's going to be an area where the market actually is going to come back and touch. So this would be considered right here a fair value gap. Okay. Because what happens is the market came back down and touched the fair value gap, bounced off, and created an upward momentum. Okay. So this is where you would place your trade. Once it hits the fair value gap, so this is your fair value gap right here. Okay, this is your order block. Okay, this is also considered demand. Okay, demand. So when it pulled back and hit the fair value gap, that's where you want to place your trade. Okay. Now, remember when I said you want to do a ratio of 1 to 2? Your ratios are designed based on this tool right here. A long position, and you've placed your trade at the fair value gap, right? And now you stretch this out, and you want to place your stop loss right below that candle, right? And then you want to do a 1 to 2 or 1 to 3. So if we did a 1 to 2, you would have made a profit right when the market got to this level right here. Okay. Right here. Right there. You would have earned some money based on this upward momentum right here. That's a 1 to 2. A 1 to 3 is pretty much stretching this out to a 1 to 3. And that's pretty much a 1 to 3, which is a ratio, and it's right there. Either or, you would have been in profit. Okay. And remember, you're going to place your stop loss below. That way you protect anything as far as reversals. So your stop loss would be down here, right below the red line here. It's your stop loss. And your TP right there above the green. Okay, so that's where you would have profited. And that's what I mean. This is what you need to learn. This is what you need to teach yourself. This is what you need to back test and practice over and over and over. Okay. Now, you could also trail your stop loss. If you see that the market's continuing to go higher, which it did, you could move your stop loss and put it in break even, which is right here. It really never came back down to hit your stop loss. It continued to go up. So either or, it's up to you. But that's what I wanted to teach you guys today. So basically, market structure, understanding that the market was coming down, then you had a reversal. The last reversal, you put a line there, and you just wait to see if there's going to be market structure shift, okay, or it takes out the structure on the left, which it did, okay, and then you place your order according to when it comes and pulls back within the fair value gap. Even if it pulled back down to the order block, you could have also placed your trade in the order block as well, but it only touched the fair value gap barely. So you really ought to pay attention to the market. Because you could have missed a trade if it didn't pull back further enough within the fair value gap. Okay, so that's what you want to do in placing your trades, whether it's going up or down. If we do a reversal, let's see if we can do a reversal and find where the market structure shift has happened over here. So again, we have an upward trend, and now all of a sudden we have a doji on top. Remember, Candlestick Bible talks about the doji. This is a doji, which is a reversal. Okay, so what happens is you want to mark out where the most recent low is. Okay, let's mark that out. The most recent low, which is this candle right here. This is the most recent low. Stretch that out and see what candle is going to break that most recent low, which is this candle right here. Okay, this candle right here broke the most recent low. Now, you have to wait for a pullback, right? Because to find the market, to find the fair value gap, you have to actually do one of these numbers. You could take 1, 2, 3 candles, okay, and see if this candle is touching that candle. So that would not be the fair value gap. So we don't consider that a fair value gap. You go to the next candle. Is this candle touching this candle? Let's take a look. The low of this candle is not touching that wick on that third candle right there. So there is where your fair value gap is. Okay. That's your fair value gap. So what happens is you have to wait for it to come back into the fair value gap in order to place your trade. Okay. Now this is going to be a tough one because if you look at it, it never really came back and touched the fair value gap, right? Never really touched the fair value gap. There's another fair value gap right here between this candle and this candle. All right. And as you can see in this fair value gap, it came into the fair value gap, and then you have a bearish engulfing candle. This way you can almost see your candles. And you could have placed your trade within this fair value gap and place your trade going down. Okay. Now again, you can place your stop loss above the candle, which is basically above this whole area here. So I'm gonna put my stop loss right there. It really never came back and touched the red line, which is your stop loss. And then you can write that down a little bit. And then you would come out of the trade down here for again 1-3 or 1-2. Let's take a look at the ratio. We do a ratio of short position. We got into the market right here. So this candle. Our stop loss is set right there. We got into the market right here. Let me stretch this out for 1-2. If it was a 1-2, you would have got profit really quick there. This is a 1-2 right here. So you would have been in profit with hit you take profit on this bearish engulfing candle. If you want to do a 1-3, it's right there. So you would have to wait for this candle to hit it. And then if you're really daring, you could stretch it out to a 1-6. Okay. Depending on your lot size. So you would have profited on this trade by just entering the market where the fair value gap was touched. Okay. Where the candle visit the fair value gap. All right. So I just showed you how to take advantage of a trade either going up, take advantage of a trade either going down. So you have your buy trades and your sell trades. And that's what you want to practice. And that's what I'm going to teach you. So today I taught you market structure. Okay. Taught you, where is that area? So not, it's gone. Okay. Can't find it. Anyway, rewind the video to the beginning and watch that section about market structure, the diagram that I created in the beginning of the video, and just replay that and just take notes and then apply it to the charts. Okay, this was a 1-minute chart. So apply, you can find that in every one of the, you can do it on the 30-minute, the 15-minute, the 5-minute. Okay, so if you see it on the 1 hour, you want to make sure you want to wait for these candles to develop every hour on the hour before you place your trades. Okay, so with that being said, thank you for watching the video. Tell your friends about the video, subscribe to the channel, and come back for more. All right, with that being said, have a successful trading week. I know it starts today around 6. Market's probably already open as I speak. But yeah, let's put this strategy into place. Make it part of your trading plan. And next week we'll talk more about candlesticks. We'll talk about order blocks, fair value gaps, ratios, okay, and protecting your principal. It's all about money management. And then I'll dive into how to actually pass a funding challenge. So that way you guys can actually, what is a funding challenge? Well, there are companies out there that will allow you to purchase a trial, right? A challenge with a little bit of money, and you're trading anywhere from 500, not 500, but 5,000, 10,000, $25,000. And you have to make enough money in the challenge in order to be approved to actually trade the actual live account. They'll give you a demo. They challenge you to see if you can pass. There's 2 phases. They tell you what percentages you need to grow the account. The first phase is usually earning 8% on the set balance. And then once you pass that challenge, the second challenge is making 4% of set balance. Once you pass it, they give you a live account to trade from, and then they profit split you where you earn like 80%, they keep 20%. It's a live account, and they actually send me the money based on passing the challenge. Okay, so we'll be talking about how to pass challenges in the near future. But until then, this practice I wanted to share with you today, over and over and over. Rewatch the video, share it with your friends, give me a thumbs up, and I'll see you next week. Thanks for watching, everybody. Take care. Bye.